Happy Monday, everyone. It's Hima here, and I've got a skinny dip for you looking at long-term ES and NQ, that's E-mini S&P 500 and E-mini NASDAQ 100 futures. Today is Monday, November 18th, 2019. And before we take a look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So here we have the E-mini S&P 500 chart on a weekly basis, meaning each candlestick is 1 week of price action. And this is the continuous contract. See how there's this @ symbol here? So in TradeStation, the platform I use, when you type that in, it links all the front months of the ES together. And that switches out every 3 months for those of you who are newer to futures. Now, when you look at the latest price action, so after the weakness that we had at the end of September into early in October, things quickly turn around, market returned higher, and recently broke out to new contract highs. Now, the latest price action shows the past 2 weeks completely up in new territory. And so let's zoom in on that a little bit. New territory means previously never traded prices on this market. And when you look back at the price action from February of 2018 and September of 2018, notice how our approach to that trend line in July of 2019, this year, confirmed resistance at that line. Prices pulled back, consolidated, and then broke up. So this makes this trend line here, even though it's a rising trend line connecting highs, which is not the traditional approach for resistance. For resistance, you want to see a falling trend line. This would be a useful line to monitor because as we start to see price action go further higher or go sideways, consolidate for a while, this becomes a dynamic support level. It was resistance, price broke above it, so now it becomes a potential floor. Okay. Think of it like a video game where you see a character jump from one level to the next and get a coin. Well, the level they just jumped through and above is no longer a barrier. It now becomes the floor underneath their feet to get to the next level. Okay. So here's our floor that we're going to be watching. And right now, based on this week's price action, it's at about 3,050 to 3,075. That is the range to watch around this trend line. Let's take a look at the daily chart to see how this trend line and the price action is playing out. So here's the daily chart, again, the continuous contract ES chart. And here's that same trend line now represented on the daily chart. So here's the potential price floor to keep an eye on. Now, as prices move to new higher levels in brand new territory, you might be wondering, how do I know how high price might go when there's no past traded price history to check against? Well, there's different ways to calculate projected resistance. And I use something called Gann projections. And I have a whole bunch of them laid out as potential projected resistance levels for my members every day in the full skinny lifetime, and that provides levels for the ES and the NQ. Those are even more precise because they're based off the contract chart, the current front month, as opposed to looking at long-term analysis. But long-term analysis is valuable to drill down to your short-term swing trades and your day trades. This is something I demonstrated with a small group of traders last week, showing the process of drilling down from weekly to daily and so forth. So when you look at the latest price action here, there are going to be many projected resistance levels ahead if you know what price history to extract from. And then looking at the price floor, again, we have that trend line that you can recreate on your weekly chart. And as price action develops, we'll probably see a couple of short-term lows that will come in and refine that area. So I see 2 right now to keep an eye on as well. One is the whole November 13th range, namely the low around 3,075, and then the November 6th range, the low around 3,063. So you can see there's this whole cluster of support. So as long as we're staying above that in price, potential to move higher, also indicated by my RSI Power Zones indicator, still making its way towards the bull resistance power zone. So let's take a look at the NQ and see where it is in its big picture. Now here's the E-mini NASDAQ on a weekly chart, again, continuous contracts. And the resistance that was previously in place that now reverts to support is a similar looking line to what I showed you on the ES weekly chart, but not exactly the same. Okay, it's not connecting the exact same price points. Here we're going back to this multi-top in August and September and October of 2018, and then connecting that line to the latest or to the next high that occurred after it in April of 2019. And then you can see that while price action did trade above the line, it was never able to maintain two successive closes above that line through July into August. And again, in September, it actually held precisely as resistance. So the latest break above this, in which case we have 3 weeks above the trend line. Remember, the ES, we have 2 weeks above the trend line. Suggests that the floor for support for the NASDAQ is a little bit further away from the current price action. So how do we navigate this latest price action, which, like the ES, is in brand new territory, never been traded before? Well, we can also use Gann projections, which again, I provide to my members in the full skinny. So those are levels projected out to the upside. So let's go to the daily chart and see what else might be coming into the support we're watching and the potential upside ahead. All right, so here's the daily chart of NASDAQ futures. And that same trend line from the weekly recreated. You can see the representation of this summer attempt to get above the trend line, but not really making a big move above it. Test in September, and then the most recent break above. So if we zoom in to the more recent price action, you can see a couple things. For starters, there are daily higher lows that are way above that trend line that might provide some short-term support. So the first being the November 14th low, the next being the November 6th low. Very similar to the dates on the ES. Now, if this area of support didn't hold, I would be on the lookout for a deeper pullback towards this red trend line. But even if that occurred, the big picture would still have room to the upside, okay? So again, the daily chart here is the continuous contract chart. In the full skinny lifetime, I go off the actual contract chart and I have very specific projected resistance levels. We've still on the NQ daily got room for the RSI power zones to move to the bull resistance power zone. So just because we're in new territory doesn't mean you can't use past price action to help navigate your trades. And when you are in new price territory like this, look for projected resistance to shape your trades and get you your risk reward that you're seeking. All right, that's what I've got for you. This will definitely help you navigate price action for the next week or two, especially as we get into the depths of the holiday season. And I'll see you in our full skinny and 4 zones RSI coverage system sessions coming up this week. See you then. You can sign up at himareddy.com/tribe gift to get access to more hot, timely, and actionable market analysis.